Guess it helps if I have the audio on too, hey? What a show. Good thing you guys aren't paying for it, eh? It's a good thing it's all free. Thanks, Abs. Like I was saying, if you look here, oh, go back. I screwed that up. Sorry. I'm going short. I'm not bullish at all. This high's been taken right here. It's clearly popped through there. It's also hit this old Sibby over here, which is, or the little Sibby busy combination here. It's the last up close busy premium. Hits that. We get a change in direction. We trade below it. We come back. We fully fill that whole thing. So now we're heading lower. So we're inside this range now. On a 15-minute chart, we are premium there to discount there. Boom, boom, done. That's the trade for me this morning if I was awake. And here, that would have been the trade. And now you're waiting. And you've even got this internal range on this side has already been swept. We've come back up into that premium one more time. We're coming down to the discount. So you got premium, discount, premium, discount. This is like 2-3 rounds of boxing here. Right? 1 to 1 to 1 to 1. As soon as that hits there, that's 4 rounds of boxing from the, well, 1 swing, 2 swings, 3 swings, 4 swings. And there's a little one here. So we've all swept these lows. This has been validated above. Let me zoom in on that now. Oh, look at that. Closes above, taps it here. So internal range liquidity bump. You're looking for the first swing from high to low. You tag, you get your first entry right there. 50%'s there, half your trade's off, 62. And look at that, you bump all the way up into the 88 and then quickly reverse. So you'd got all that internal range liquidity hunt on that one candle. Then it finally came back and took you, well, it would have came back and tagged you out right there at 78. So that would have been a delicious little run this morning too. And now you got to wait to see if it gets back through here. Otherwise, we could be in a small little 15-minute turn here. I can repeat everything all over again. This is what it's going to be like at the seniors complex when I get there. I'll get up in the afternoon for my morning tea. So yeah, that's pretty much it. Yeah, there's nothing here. I got nothing. You waited all that time for that, hey? That's all you get. Let's see how Bitcoin's been now on a little move. We're up to 89,000 again. So keep your eyes on this close on 15 minutes. And for 5 minutes, keep your eyes on this close right here. From there to there. So we're getting there. Watch the next 7 minutes to see if it closes below here. Excuse me, that becomes the no-go zone. And then the new rundown from here we're targeting this again below us. So you got two SIBIs on an overall range. Morning, Hans. My wife's last night, she's like, you better make sure you get to bed early, because every time I'm there, I'm always telling you, get your ass to bed so you can get up for it in the morning. I'm like, I always go to bed early. She goes, you do not. You've never been in bed before 10 o'clock. She says, you better get to bed. And it's daylight savings time. Forgot all about daylight savings time. So there's an hour gone. Funny. So then my 9:45 alarm went off on my phone. And I was like, oh no. Oh, I'm an hour late already. Yeesh, I better get up. So while we're waiting for this next 6 minutes, there's the hourly again, if you see it. The box to box, or was that? Oh, it's not in here. It's the 15-minute, wouldn't it? Yeah, box to box. There to there. Boom, boom. Then there it again. Then here again. So got 4 rounds of it right here. 4 shots. So we're waiting for that pop through here now, and a pop through here, and that should get us again on our hourly. And we're going down. Going down. I want to see a big run down now. We'll get up just in time to catch this early morning, get through all the noise pollution, and looking at that guy right there. Retest, roll over, come lower. 830. I'll take the sell on at 830. If 830, and I'm just using the 830 as a trigger, that's all. And the fact that it's lined up with a bottom here and it's switched over still. So the stop loss has to go above here. We're looking for a run on the liquidity below the market. So I'm looking for a pop through here now. I'm actually going to leave that right there. Break even. Home Alone. That's exactly it. See what happens when my wife's not here? Oh, that's hilarious. I've got, if she was here right now, she'd kill me, because I made dinner last night. There's still plates out there. I didn't get all the dishes done yet. Yeah, we haven't gone through here yet, so my stop loss is really tight. So we can come back up here, see if we can get a reversal here, or at least 50% of this wick. What time are we on? 12. We got the squabblers going now. I'm going to grab my coffee real quick while these guys are squabbling. So look at that. I'm taking a break already. already. Get to the mean threshold of that candle. Nice. And this small little run. Not 50 yet. Good morning, Hadi. Did you just wake up too? All right, still heading lower. Gotta wait for it to break through here now. Just be patient enough to see the breakthrough. Or it can just be one of those sideways motions, just going engineering liquidity, uncertainty. That 938 level, so this is all important now. I'm gonna go short there. Stop loss is gonna go really high on this, so I'm taking something different here, taking a different trade. But if you're gonna wait for the box to break, that you need to get this, has to close through here for this to continue going lower. I've just convinced myself that the 3 a.m. I'm doing Mark's 3 a.m. candle here, trading off that the bottom of the 3 a.m. and stop loss is sitting right in the main threshold. So I'm using the 830 as the pivot point. The actual entry is at 38, should be at 38. Right there. We break this. I spent all day trying to get that 10 grand I lost in the morning back. I managed to get it back yesterday. I think it'll be like 18 by the end of the day, but this is the, you can't break this area here. Otherwise I'll close that out before we get there. And then you have to be patient enough to wait for this. This is just coming back into that no-go zone, which is this guy right here. We've already closed above this level, so rule's been broken. Take the loss. Stick to your own plan, man. I was trying something different. Got to wait for this lower level here to get broken. We already broke back through the no-go zone, so now we're back to uncertainty again. So that 15-minute held. Got to wait, man. Follow the rules of whatever your trading plan. I see you say, just jump right out of my own trading plan there. I thought, I'm going to try something different. And there you go. That's what happens. Now we're going to wait for something clean. I'm going to make that back now. And there's the retest for going higher right there. Boop. Now you got to wait for this to break. And we're back in here. There's nothing in there. $25.0. 0.10. That's a buy off of that. I'm wrapping the premium already. I don't want to lose the mean threshold of that candle. Stop loss has to sit below here. If I take the high, then I'll go to break even. I don't like that coming back into there already. Right there, it's got to stop, man. Can't keep working your way down. Now all you got is this retest here. We could lose the mean threshold. We're targeting this whole area here, and I do not want it getting back down there. If you're going to go higher, then that mean threshold has to hold. And the wicks. Cut your leverage down, man. I'm not letting it get any lower than that now. It's already uncertain. It's already come into here once before, so get out of that. Now it goes higher. So there's the fill right there. Now if we keep pushing higher, we're looking for that first presentation fair value gap again. Yeah, it's totally primed for a big run down now to Hadid on the 4 hour for sure. Oh, you want to see it reverse and take the upside? Mm-mm. No, we've already traded back through. The problem is on the 4 hour, if that's an imbalance down there, you know. No. Yeah, you could still be bullish, Adi. You'd have to break 866. 866. You'd have to break this on the downside to go bearish on the 4 hour. On the 1 hour, we're back up inside that premium again. And we filled right there at 0.20. That's 0.20. So that's kind of like, are we going to go from here? Or are we just going to go back to 0.3? 20 to 0.3 right there. That's a key little area right here. So this low, that mean threshold, bull trap. We're right inside this mean threshold. So we're not going lower through here, and we've got to get back through here on the 15-minute, and you got to break the high before you consider a real push for this high up here again. We haven't even tapped that high yet. We're in really kind of a little bit of uncertainty right here. We've got nice some equal lows there on the 15 and 5, 1 minute. Bull trap, snap off of that, get through here, back into this run, and you're looking for a run down here. Looking for your 830 to get hit again. You were long too. Yeah, there's a nice little tag right here. Let's see if we can get back through this level now. So you see the key levels we got here is where we just hit, right there. The next key level above that, which is this high, which was a key level before, reacted off of it. That key level there, we should react off of it. If it doesn't, then we're looking for this wick, half the wick, and you're back into this key level, this data point there. That got hit, this got hit right now, and see the kind of reaction we're getting off of it, snap off of it. So if we continue to pop through here, then that data point now puts us back into this range. And we've got all up close candles. So you'd want to see it come back down and take care of the bottom now. You just want to see it punch through here and there, get up on top of this with a nice closed candle, and a fair value gap would be nice. Graded response, and then start targeting new highs again. And then start running all back up into those equal highs we've been looking for. Even though I've been looking for lowers, now that's what you're looking for higher. We didn't get our 15-minute zone broken, so you're back, bouncing back in the range now. And don't venture outside of your trade plan, because I was trying something there. I was trying a 3 a.m. candle run. We had a little close below the edge of the 3 a.m. I thought, oh, this would be sweet. And it's right around the Hades 830. So I was thinking this would be a really nice opportunity to go short here. So I risked it and thought, well, the rule is then that you have to be above the consequent encroachment, so, or the mean threshold of that. So I thought, well, that's way up there. That's a huge loss if I'm wrong. And we haven't broken that level. I'm going to give it a go. Nope. It proceeded to say, hey, look, consolidation, displacement above. You think, okay, that's not a good sign. Maybe it's going to hold back here. And then you're like, nope, it's popping through that level. You think, oh, it's not. That 15-minute held. This whole idea of the 3 a.m. candle not going to work. Finally popped back through, gave it the thing. I'm like, okay, you're out, because that's coming for your stop loss. That's coming deeper into the range, and it's going to take a bigger hit. And if it does continue going, you're really committed to losing all that money on the hope that it was going to go lower. So, and it's showing you proof right here that it's not. So I bailed. That was the logic behind this. Look for this high next. Right into our 6 a.m. candle. We almost bounced right off of midnight open again, hey? It's interesting how the 8:30, the midnight, there seems to be a lot of waffling going on there, right on key. Squabbler times too. The 9, 10, 11, 12, and the 16, 17, 18, 19 candles. The squabbler moments. Now we're looking for the crazy Ivan. 30, 32. Oh, we're still going higher. 30, 32 is your swing point, and then you get the crazy Ivan reversal, right? It's not, it's continuing higher. So look for this level here at 82. That's a retest. We're above this level on a close, but not above the high on a close. So that's another little test. I don't think they're going to leave this untouched. Back up into that premium level again over here. So now what you look for is, do we have an opportunity now to see another reversal again? We've come back into it. We've dropped below it. We've come back in it once, twice, 3 times, 4 times. Either we're going to drive through it, or this is going to turn into a wick again, and we're going to come back down and take these lows up. And it's bouncing off of a key level, so we've got confluences that are starting to line up now, right? We have mean threshold again, we have 15-minute premium, 6-minute, or the 6 a.m. candle. So if you want to see them break, they all got to break in grand fashion. So had we been a little more patient, we would have had all that with 9,000 or 7,000 or whatever it was we lost here. That would have all been back right there. Patience is the name of the game, man. Oh, my wife's back tomorrow. Got some cleaning to do around the house. All right, there's the mean threshold there, 6 a.m. And the consequent encroachment of the premium on the 15. The Asian low is your last downside target, indeed. That's the top again filled. Slowly grinding higher. There's one more right here at 114. 114. You said you were saying that your morning or your lowest, like Asia low, is your downside target, your last downside target? Yeah, we're sitting in the Asia range right now, right? Low to high. I think that's Asia high. Oh, yeah, that's New York low. So Asia low is here. We're sitting inside that whole Asia range right now. So we've run that high out. We've closed above the 6 minute. We've hit that 114 level. I want to see if that 114 holds, or we start setting it back down again, or it's just pop through it like it's nothing. I like the fact that we're getting a reaction off of it. Now for me, we have to get back through here, through this candle, use the 6 a.m. in this candle as support to keep coming lower. Otherwise, this is just a small little retest and then continue pushing through it. It's the last one in a range I'm looking at. Darren, it's great that you have a lovely wife who cooks for you and gets you up in the morning. I think it's because I know she's got to go to work. So I get, before she gets up, I got to be up. And then I just kind of go right back to my bachelor days, like carefree, man. Sit up, watch TV and play video games or stare at the charts. It's like being a teenager all over again. It was great. And then when she's here, you know, you got to keep the house clean. You got to, all that stuff. And it's like a day you just get to kind of cut loose for a bit. It's fun. But she does keep a beautiful house. I tell you, she's an amazing woman. Not that that's a woman's duty, you know. I'm going to shut up before I bury myself. So just keep your eye on that 114 level there. Mm, 105. I'm between these two candles right now. This mean threshold's holding right on a 45 candle. So you got this one right here. Its mean threshold is 105. There's 105. Now they're battling back and forth. Who's gonna win? Who's gonna win? This will be another one of those exercises on don't count your chickens before they're hatched. And 114 is the last one. It's the one of those, It's each one of those little PD arrays. You got to keep in mind, if you keep saying, oh, we're going for the highs, then you got to say, I'm out of PD arrays left to go to the highs. So the only other obvious direction it should go is for the highs. Hence the reason we were saying target this, then target that. And then you're 114. And now we're sitting there right in that mean threshold of that candle, which is right in the consequent encroachment of the 6 a.m. Now you got to see this get eaten through, pop back up on top of the 114, and now we're good to go. Then you can say you're heading for the highs. Because if that just rolls over now, and it just keeps coming lower, you go like, damn, right off of that 114 level. Now we're through that mean threshold, but not on a close. Mean threshold to me, so we set that level there to the 105 level right there, and now we've opened on 105, and now I want to go higher. So you got to bang through 114, not just bang on it. You got to get through it, come back, find support at that, and keep pushing higher. And that's 3 times. That's been a sensitive little area, but we're obviously holding high. We didn't get a big drive down, so there's the pop through. Just above it, find support at it. You can start sending her up now. And where's your next target? 129. So there's the pop test. 129's next. Going to 50-52. How big is that little I can't remember which one it was I was looking at. This one here at 121 to 127. 121 to 127. That would be just the annoying thing for it to stop right there. Roll over and come lower. I just want you guys to see the sensitivity at these levels. So we're just banging on those levels. That 114, now the 121, 127, and then the 129. What levels are they? They are the 5-minute. They are the 5-minute, I gave you the 5 minute here, the one that we were banging off of here at 114. Then I give you the 15 minute one right here. And then I give you the final one before the run higher. And that's the rejection block. And that's up in here. So each one of those have key levels, and you saw how they kind of become sensitive areas, and you slowly work through them to the next one, work through it, and then either keep pushing higher or you're going to see some sort of bounce off of there. And if they are sensitive levels, it's not like you want to just keep picking a high here and saying that's it, so it's got to stop there. You just go, okay, how are we acting off of it? We just bouncing on it and just building up some momentum here, like cold spring, and then shooting up to the next level? Or are you getting a snap off of that with a nice displacement candle saying, I've changed my mind of heading in a new direction? Or is it the slow insidious grind higher? And if it keeps holding it and your next key level doesn't get broken, then it's just a small retracement back to the mean threshold of that candle. Remember, we were talking about that one and that one. They were two fighting back and forth. There, finally break it right there on the upside. We close on it right here, open on it here, and go higher. So now you're into the rejection block, and now we're finished closing out that 15-minute one. So you see how it doesn't just march right through these things? There are areas of sensitivity. So now I want to see if this just, or we continue to push through and reach for these highs here now. I'm especially not committed to run for those highs right away until you see where this one finishes. A lot of times you'll see this just come right up here into the rejection block and then roll over and come all the way back down again. And people say, I said it was going to go here. It's like, no, those are those last data points you want to see get cleared for it to run there. But you know, if you're on a lower time frame or a higher time frame, like a 5 or something, you say, well, then my stop loss is sitting here. I want to see it take those highs, and I'm going to pay myself at rejection block. I'll move myself into profit. So it doesn't matter if it doesn't take that high. I'm paid right there at that level. And now you want to see how it closed above it here? Pop. Send it up. Now you're looking for the highs, or at least 50% of the wick, depending on how big that wick is. You're looking for that wick is 50%, and then the high. Small data points, they may not mean anything to you. You may go, who gives a shit, Darren? I'm just going for the high. I don't care what you say. Fair enough. The show is just about staying in price action and reading it as it's happening. That's all. So looking for 150, 145, then 150. Look at that. Just closed above it right here. Consequent encroachment. Send it through the next one. Now you're looking for 45 and 50. There's 45. So the next one is 50. And then you're looking for a little reversal. So we get a little reversal here right around 11 o'clock, which is a perfect time to run these highs out. Clear that up and then start sending it back down here again. You look at the 4-hour chart, we're just barely coming into the 4-hour premium on the larger range. Like that starts down here, right there, which is strangely enough right on the very top of the 6 a.m. candle. Odd or not? Anyway, that's the start of it, and the end of it is way up here. That's it. That's the premium 4-hour. Yes, yes, indeed, indeed. Yes, yes, yes. Let's see it, man. Let's go. $11 o'clock. Highs are taken. Yeah, the high's been taken. This is the nice big bold candle. Turn around. Let's take another 1 minute to create a nice little fair value gap here, and let's pop through this. Take that candle. This is the 11 o'clock setting up here. Don't come back and fill that. Just leave it open now. Create a little candle. You can come up to the consequent encroachment of the mean of the 4-hour. Right there. Now just come back and make a small little candle here. Because if it makes it any bigger, then I want to see that act like the fair value gap. So that's good. Just kind of keep it under control here now, you boys. You got your consequent encroachment. Now let's see if we can get a nice little bounce off of here. It's going to come back and fill through here now. So there's the fair value gap we're looking for. Now this would have to fill in here and stop and then come back through here. A nice little displacement down, something to show us that, hey, look, we want to change directions. If not, then this new fair value gap moves from here. This one becomes the in-hand one. This is the active one. In other words, it's actively forming. So now that becomes the in-hand one. So we'll be moving like this. There. So we've got the consequent encroachment hit, and it's right on a 2 level. That would be a nice turn point. Nice trade right there. On a 2 candle at a min threshold at 11 o'clock. Oh my God. Talk about confluences. I'm going to do it. What the hell? I'm going to commit to the idea and put that above the 2 a.m. candle. Or not 2 a.m. The 2 o'clock candle. Sorry, not 2 o'clock. The 2-minute candle. See you later, Abs. Don't thank me, man. I really haven't given you much today. Have a great day. Do it. Do it. Delicious. Thank you. No, I don't want to see this get back through this level here now. Hope you all made a ton of money today. I'm hanging out with the bees. 78 here today. Woohoo! 78 bees. The Bee Master D. Enjoy your bees, man. Research has shown that the vibration of bees alone is good for your, like the waveform is really good for the body too. So I'm going to move this into a zero stress trade. I like that idea of that 2-minute candle right at the consequent encroachment, right at 11 o'clock, right after a BISI is formed. Oh, it's just too tempting. So that's beautiful, beautiful little dot. Now, if Richard and the boys were here, guys I used to hang out with a few years ago, we're building bots. That research, that 2-minute candle being used these years later as support for this trade. Research, well done, my friends. Well done. You're out, Hadi? Yeah. Thing is, we can still come back and visit all this again. We've got 1, 2 taken out. We've got, I want to see us get below here. So you're right, Hadi. I'd like to see that. Be careful that it doesn't just take out a low here. And then we have a 7 candle and a 9-10 turn. So we should really, no, I'm going to leave it there. I'm in profit right now. I got to make back some of that we could be running deeper into this range. So if we're using our take profit model 1, there's 50%. So you got to take one of your levels off here. Take one off. We'll buy that back. And now the stop loss goes to break even. So now we're going to leave the rest on here, and we'll trail this down like a take profit model 1. So we're hunting internal range liquidity. That's it. So there's the first one. You take half your trade off there. I've only got 3 on, so I'm going to do one here, and leave the rest on to run. So as soon as that hits 60%, I'm going to pull that right down into profit. You see how we've closed below this? So we can come back and retest this. See, I don't want to see it to go to 62%. Come back, retest it at this level, because that'll come through my 50%. And the rule will be you have to close it out at 50. So I'm going to give that, I'm going to move it to right here. And I don't want to see that mean threshold get taken. So we've got 1, 2, 3 levels. I'm giving it a maximum of 4 levels, 4 data points to come back to before it hits 62%. Because if it hits 62 and then comes back to here, the chances of it running through are greater, because it's already hit that optimum trade entry reversal. That's the logic I'm going with, in case you're wondering, which I'm sure you're not. Look at the 15-minute chart, Hadi says. Yes, indeed, Hadi. So now we've closed above here. We've tagged it. Are we coming back through the mean threshold of that candle already? And that last one right there, we're just tagging it now. So there's 62%. So I have to go to 50 now. And I was too busy looking over here at the 15 to catch my one off there. And that's the 910. So this is a good place for it to turn. The 910 turn. In your head, in your head. We're done. Internal range liquidity. Sweet little apples. The 630 or the 62% turn. And a delicious trade. See, now had we not been so impatient trying some other bullshit out over here, we could have had one trade this morning, one and done, but we're still hunting for. See, here's the retest of that mini threshold. This is what I wanted to see before we hit that 62%. I wanted to see that this candle come back, tag that, and then go lower, but we haven't. So we hit the 62. So the lion's share of that internal range liquidity hunt has been hit. That's where you have the optimum trade entry reversal. And now that level is the key level on, do we just come back, retrace, and then this becomes the next price leg lower? Or does this become the pivot point? And we've got a small little fair value gap that's formed here, and we're above it. So I'm back into, I'm going to wait for something clean. Mean threshold holding. This has got broken to the downside right there. Right there, we close below it. So we're looking for a further continuation. So the next leg down would be these lows here. So that we're targeting this next breaker down here. So if you look at that 15-minute now, Hadi, if we start to eat through that last candle right there, and we've already started eating through it, where's the next SIBI below you? It's right here. A little tiny one right here. And that puts you right into that next price leg lower. So you can see how they're kind of lining up there from a data perspective. Mean threshold, holding price. You can give one more little pump up into here. 136. I'd be all right with that. Wait for this to break above here. And now we're targeting a new internal range liquidity. The fruit are hanging right here. So wait for a body to break above here. It may just run straight for it. Like if you look at the 50%, you're probably already through that already. See, it's already reached for it. That's the sweet fruit right there. Wow. Like, did you draw that 15-minute one out, Hadi? Did you see that? Look at these lows right here and now drop back. I just want you to see this. Draw it back. I'm going to hit there. Hit my space bar to hold it tight or my thing there. And look at this. Look, dude. Look. Look. Boop. Boop. Right there. You see how that last up close candle, it's consequent encroachment? Look at the bodies. Look at the bodies, you guys. I introduced this concept a few months back, And it just keeps seeing so beautiful. And look at how 62% of that range was right into our box, or this range here, nailed right into our level here. Love it. So you're looking for some sensitivity there at that level. We had a little bit of a punch through, a little bit of wick, but the bodies respect that. And then on a 15 minute. So when Hadi was saying, be careful, that's what he's looking for. Well done, Hadi. Good eye, man. That's a good eye. Very nice application of the principle I brought you a few months ago. You opened my eyes. And they're pretty little eyes you got there, Hadi. So let's open them up, man. Open them up. You guys have got to meet Hadi one day. He's got a great little smile. He's a very kind, he's a gentle soul. He really is. He's an amazing guy. So I'm glad you see it, Hadi. I'm glad you're seeing some of the logic, and you embrace it for sure. So, and you guys all see how successful Hadi is with this stuff. So it's always nice to see somebody putting it to good use. So there's the internal range liquidity hunted. There's the premium box taken. We didn't get a chance to get in off of our bull trap. I wonder if the 15-second would have given us a bull trap tag. That was the bull trap right there. Nope, even 15 seconds didn't give it to you. Now you want to see this close above here. The same thing again. Now you're into a model 3. See a body close above here. Come back in, tag it. Otherwise, this is the rejection block again. You've hit the rejection block. If it runs back through here and uses this support, we're hunting this and that area that never got a chance to get tagged. Remember, we wanted to see it get hit. It didn't. This one didn't get hit, and this one didn't get hit. So this is the time for it to hit rejection block and reverse on you and come all the way back inside this sweet little fruit hanging right here. It's all ripened up right in the mid zone of this small range here. No, Hadi, thank you. See how they're small little fruits, blossoming fruits. So again, we'll do this over and over again so you guys stay on the horse, man. Don't commit to higher and higher prices until you see your lower time frame support the direction you want to go. So it has to break through there on a close. See, it wicked into the rejection block again. Pay yourself there. Change in direction. It's got to close above here to get into the next model. It doesn't. Now, if it closes below here in the next 6 seconds, where are we targeting for? Internal range liquidity right here. 50%, 62% will put us right back into here. You see where 50% puts us? Right back in that little tiny one that was ignored earlier. So watch. And then think overall. This is the big premium we're working in a 4-hour chart and a 1 minute, and we're contrasting that with a 1 minute chart. And you see how we're not finding support to get into that next premium range. So we're at the for a 4-hour premium candle. If you take that premium block that we're working in and we look at the premium and discount of the discount portion, does that make sense? So we have this. You take this whole area here and we say, what are we working in right now? Oops. Right there. And then we turn that into quarters. Okay, so this is the premium portion and the discount portion of the discount portion of the premium 4-hour candle or 4-hour block. See how you're breaking it? We're really breaking it down into a fractal idea here. So you take that whole block, we have hit the consequent encroachment of it, or the mean threshold of that, and then we're saying split it into your premium and discount portions of the discount portion of the premium portion. You see that? You're following me? So we're hitting premium. So we'll go premium, discount, right there at 50%. See how we're tagging off of it? Remember, we wanted to see that 50% get hit. So we're just banging around inside this premium discount of the discount portion of the premium higher time frame candle. And all the time you're standing there and saying, well, we're not reaching for that upper crust of that 4-hour yet. We're still banging around working this back and forth inside here. So remember, I was talking about the low-hanging fruit right off the rejection block. We didn't get this. Coming back to get it now. There's 50%. Pay yourself there. 62%. Same thing we just did here on the way down. We're doing it here on the way down again. And we're aiming for our bull trap again. Remember, we went through it. Didn't get a chance to get it. We hit the premium, and then it said, let's go back and get those areas. We're going to come back and tag it here. And then there's the only other one left is down here at 70% optimum trade entry. Perfect. So if we come down one more time, tag 70%, then you want to see a reversal. And then what do you want to see? This bull candle right here. I want to see that become the next bull trap to get through, which would also be the premium. Get through that, come back, give it a little kiss, run through the next premium, get on top of that, and then we'll start working this stuff up here. But we're in the discount. You see how we're in that discount portion? There's 50%. That's all you need. Reach into here, tag our bull trap, and get the hell out of Dodge. Remember, it's mean threshold right there. It's a super sensitive area. Look how it overlaps with the small little sibby here. It's mean threshold, and what? 70% optimum trade entry reversal. And there's nothing else. After that, there's nothing else. We also have the consequent encroachment of, or mean threshold of this candle right here, which is sitting right at 132. So that would be below that level. I wouldn't want to see that. Anyway, you see my point. So you would have got low-hanging fruit inside here, run back up, look for that level there. We didn't get a chance to get in on it to aim for that, so you wait for a breakout for it to continue, or if it reverses on you to come back and get that, we want to see it break through here, tag this, and then go lower. It didn't do that either, so we're just going with theories now, which is internal range liquidity hunt here, which is the 50% it just hit, and now we're looking for, is it going to finish this off down here to tag this one more time inside here? Or are we now going to pop through this level and start going higher? And you wait. Because if you're just trying to chase price there, and I don't see anything logical in here to key off of, just using my rules anyway. If you've got something that you can see there, by all means type it in the chat on the side. I'd like to hear it. I'd like to hear it. And we're just going to have a healthy debate. If you got a different opinion, I want to hear it. And just be prepared to have a debate. I'm not looking to prove you wrong. I just want to see where your logic is. So I always want to identify where people's logic is, and or help you out. If you agree with what it is that I'm doing, then I'll just kind of help build the narrative for you around that direction. See how, look at how many times we're trying to get down here. We're hitting that level right there on the open, or sorry, the close of this candle, that bull trap. So we've now come back, we validated that one. There's no SIBI in here except for that little tiny guy right there. So I'm just going to put a line on that because there's not much of it there. You see it right there in there? That's the high and the low of it. Now, here's the interesting thing. If that held and that little push up higher was all you got, and there was the change in direction right there, body's respecting it. And we're talking precision here, you guys. We've got a bit of wick damage. Hit the rejection block. Bodies are respecting that so beautifully right now. And now we're back inside here. So if I want to see it pop through here, now this little tiny zone becomes the no-go zone. It's a small little tiny thing because we're in a small range. So those big no-go zones all are relative to this whatever frame or time frame you're in and whatever range you're working in. So you want to see that just pop through here, come down and just give it a kiss. That will be the full completion before going higher of the areas that we left out. This is like the old Hadi and Darren standing at the bus stop waiting for them to come back and get us, right? With our little lunch bags. That's the one we used to talk about last year or so. We're sitting at the bus stop waiting. Bus is coming back, collecting up passengers. One more time, pick up Hadi and Darren with our little lunch boxes. And we're going to wait for everybody to get on the bus. If the bus just keeps creeping by, then we're not going to get on. We're going to wait. So this is just a box to box run inside internal range liquidity. It's a box to box. There, boom, right on it. So now we're going to wait and see where that in the next 18 seconds closes. And it's right on a 30 candle. So what is the 30 candle? Crazy Ivan. Crazy Ivan. Mean threshold of, this is an old one back here, but the mean threshold of the last down close candle, that's our 128. Look at the bodies. Oh, look at that. 30.32. If that breaks that low, we're heading for here. Small little gap there. See that? Close right on that little gap. It just gap below it. And we're just got a small, tiny little imbalance. Stretch it out. You'll see it sitting right there. See it? Interesting how it jumps over that little level, eh? So it's pushing lower. Literally opened on the bottom of it. Came back in, wicked into it and said, nope, I want to go lower. So interesting, hey? Keep your eyes on it. Watch, watch, watch. Old level getting tagged. Mean thresholds getting eaten. Your ass is next. Look for the rejection block. Like array to like array. Done. Ding dong. Internal range. So now I want to see it pop through here and use this candle on a close. Go lower. You can see why my rejection block is so important for you guys to buy into that theory. If you don't, you're going to get your ass handed to you. If you keep overshooting your PD arrays and you keep saying it's going higher, it's going higher. If you're not finding support at those levels and it's come back against you and you go, why didn't it go? Every time it screws me over. Well, look, I've explained this to you all the way through every candle. We did a little internal range liquidity hunt. This one we didn't get a chance to get in. This one you don't get a chance to get in But you saw the key levels that it was aiming for. It jumped over this level. And then we said we'd aim for that level. So it's all hitting these key levels. All the time you stay on the horse, you can see the accuracy. And this is no different than an hour chart, 1 hour chart, 1 day chart, monthly chart. It doesn't matter. We're just on a 1 minute just because it's a fractal time frame that you can see things manifesting quicker. So you don't have to wait 2 weeks for a daily candle to show you the same thing I'm going to show you right here. It's the same thing. And the sooner you buy into that and understand that it's an algorithm that's driving the market, the better off you're going to be. And if you don't, then you don't. So we've traded below that level, tag it. Now I want to see this candle hold support and this roll over and keep coming lower now. And as soon as it takes that low, that's good enough. That's good enough to get yourself to a risk-free trade. Now you may go, I'm not going to do that. I'm just going to keep going in, put 100 trades in there. It costs me per trade. Well, then you should be covering the cost of your trade so that you can go into that no stress, so that if this is going, if this does take off, you've caught it at an optimal time and you're demanding that price doesn't get above a certain data point. And if you're not familiar with the data points, then you see, look at that. Pay yourself there. You're stress-free in this trade right now. And you're just sitting here watching it go like a video game. But it's not a game. You're looking at, now where's my next data point? Does that make sense? Do you guys see the logic of this? It's been a good show this morning on, albeit late. It's a good show. So you've paid yourself there. You've hit off this next BISI below you, right at the consequent encroachment of it. So I don't want to see us revisiting this one more time. So this is a revisiting of this, retest of that. If we start to run through here, now you got to start saying what in here is, and you'll see it sitting right there. What is support to come back inside and target internal range liquidity? Watch the next 12 seconds. I don't want to see, we didn't want to see it come back into that thing. We saw it tag it once, head lower, pay yourself. You're out of the trade right now anyway, because you nibbled that little piece out. You paid yourself at the low. Unless that was your target, then great, you got paid there too. And now we're watching. See how we've closed above that level? All bets are off for lower right now. Just wait. We're into the mean threshold of that. So I'm between here and that guy right there right now. So I've got a conflict. I don't have support. I have a conflict. This is conflicting with breaking a low, small change in direction, into the mean threshold of that candle, which should still hold price and send it lower. So now I'm in conflict. So now I wait for them to come back into alignment with one another. That's got to hold. This has got to break. That's got to support. This has got to support and keep going lower. So when you get this conflict, that's when your mind says, oh, it's really going to go lower. Well, wait. Wait for that confirmation now that this is just a run through to the mean threshold of this and then come back lower. I'd like to have seen that use this area here one more time to go lower long before it took that out. So I wanted to see this wick come all the way back up in here, give it a tag, and then go lower. So we could still see price run up into this. Remember the no-go zone I was telling you about? See how the no-go zone never got hit unless you consider the open. And again, we've talked about those people who want to gamble on the open or close instead of the body closing below it and tagging it. So watch that level. So if we get that, then this, we're back to, see how we've traded below that level? We're into this and now we're coming back in. So you say that's not the candle you want. We traded above that level. Now we traded below that level. Now we're trading above that level again. Confusion. See how they're not in alignment with one another? This is the chop. This is the chop you want to see and avoid. So we saw that we never got a retest of this. We just got a retest there right now. Now it's got to book it down. This has got to get in sync because we've got another one sitting right here. Those two have got to get in sync. If not, that little no-go zone right there is the, I got to wait for it to break above there. And then because that takes the mean threshold out, takes this out, this out. Now they're getting into an alignment with a run higher. And you got to hope you're in there before the 50%. And as Hadi is pointing out, we've got a SMT as well. Mean threshold. See how the mean threshold's been traded through? And now we're coming back to it. Tag it. Now you want to see that higher level confluence, confluence, confluence. Pop through here. Now come back and tag it. But you want to see a body close through it, not just tag it like that. Because it's still bearish overall. All the time the no-go zone is holding. And you see how they're all kind of saying, are you going longer? Are you staying short? We're still inside the big 2 candle breaker. The last most sensitive one has already been chewed up. But the whole breaker itself is still holding. And that is a key area right here. So what do? When you've got all this confusion as to which direction it can go, you wait till you've got everything aligned and clean. And if it takes off and you've got fear of missing out, you need to address that psychological trading issue. I'm trying to show you the super detail of being in price action and watching as it's working. Because if this was a daily candle, you have to make a decision. If you're in a daily confusion like this versus that, hit that level right there and look for any reversal opportunity to catch this for the next 2 weeks run down here. Or seasonal tendency, March, April, for a nice big run down into July. Time, man. So now these wicks are just chewing up some stuff here. So look for this internal range. The low-hanging fruit. Where's the low-hanging fruit sitting? Right there. There's 50%. Now come ripping back through this. Take all this lot out. Notice no body are broken through here yet. And we talked about this when it was way up here. And we talked about it being a no-go zone from way up here. We said to keep an eye on it way up here. And look how sensitive it's become. You're out of here, Hadi. You're welcome, buddy. See you later. I got a few more minutes and then I'm going to go do some housework. Now you're above it. Now you can consider the rest of this box here and then keep your target up here. Get on top of that, then start targeting these highs or the midpoints of the wicks and then the highs. Take the candle and break it into like quarters and see where you're headed. That's the high of it right there, 159. So you're inside this one, this one, this one. They're all overlapping. Wait for the top to break here. Then you'll do a model 3 from here. This one hasn't been hit yet. Once again, rejection block. Big reversal. Rejection block. reversal back into where? Tagging this level from the top, or this little bull trap. Is that a bull trap there? Open 875, close 855. It's down close candle. There's the tag of that one. Now let's see if we can get a run into 875, close. Down close candle. See? It's a rinse and repeat itself. Rejection block going higher. So all those, it's like, oh, it's going higher for sure. It's ripping higher. It did not break through. It hit rejection block. And this one hit rejection block over there, went lower. This one's hit this rejection block, went lower. This one's hit this rejection block, coming lower. You got to buy into the rejection block theory, you guys. Otherwise, you're going to get beat up. Your stop loss is going to get run out over and over again, and you're going to get frustrated. You got to really keep an eye on these data points. So if you're looking for an internal range liquidity hunt, again, 50% puts us right there. 62% puts us here. And we're looking for this little target right down here, which is 75% puts us right in a perfect fill. There's 62%, right on a 45 candle. That's all you need. You don't even have to come back here and send it up. Oh, it's just shy of it. But you're in a discount. Send it up. Oh, cut through the candles. Right here. That still didn't hit the high or the close. Oh, it's close. And the 75% lines up right here in the middle of this guy too. Watch this level. We're going to start compressing here now going into lunch hour. That Hadiz is such a great guy. It's a very soft-spoken, just a nice, it's a nice guy. You just want to cuddle him. He's just so cute. You just want to go, oh, Hadi, give me a little hug. He's a nice guy. Yeah, if you ever get to Toronto, give him a call up. Meet him. There it is. Boom. Right through it. Nice. Now, look, there's a little tiny guy right down here, too. Right there. Just hit it. Now watch, see what this wick does. If that just tags that and wicks all the way back through here, or if it closes below there, inside this little range here, this one that we had that was inside this range is now this little guy down here. Those two sticks would go right there, right where we just tagged. Watch where it closes. And you're starting to get into that lunch hour, and we're getting into the new macro. The 1150 macro now. Two, one, look at that. Boom. Stayed right on it. Again, look at that. Still gapped. And it's gapped again. Look at that. Right on the money there too. Stretch it out. Look at that. These little gaps that occur inside that sucker. Very cool. The entertainment you can have with just little candles, hey? Look at the support there. It gapped down and still staying in there. Came right to those two. I'm going to create little sticks for these guys so you can see my point repeating itself over and over again here. Albeit a late day, you guys got some good study and price action today. This has been some gold here. If you take the time to study this, it's you guys have got some really good information here. Go back over the video and you'll see me talking about all these things setting up before they set up, why they become important, and how later on they get utilized. And you'll see why, if you take your theory of everybody's calling for higher prices and it's taken there and it keeps coming back and taking out your stop loss because you got your stop loss tight, or your higher time frames are not working out the way you want them to, it's because the lower time frames haven't given you the confirmation that we're headed there yet. And this is just another good example of that. Staying on the horse as it spins and turns. We're staying on it all the time. Look at that. Look at those little, doesn't that Lego piece there just kind of make you go, wow. Look at that. There's two little Lego blocks just fitting right inside there, hey? Pablo. Nice. Hello, D. Nice stuff. It is nice stuff. It is nice stuff. It's logic. And it's reproducible on anything. This isn't just I'm form fitting this to a 1 minute chart. This is applicable on all time frames, all charts, everything that produces an algorithm or produces candles. This same shit happens on everything. But you got to buy into the idea that there's an algorithm driving the market. This isn't buyers or sellers. This isn't enough volume here at this level that's turned it exactly on these precision points that we're looking for, these precision data points. That they say, okay, we've got enough buyers and sellers now, we're going to switch it up. Bullshit. Has nothing to do with that. And I know that's hard for some people to understand, but that's why we're here in a 1 minute chart in NASDAQ, 100 different companies, and all the instability going on in the world, all the crazy shit that's going on in the world. And we're still looking at precise data points. And then you can see heavy manipulation days for sure. Like, I'm not saying you don't see crazy ass wicks, because we've been dealing with that all the last few months. It's just been chop manipulation. But when they're leaving it alone and let the algo just do its thing, you're seeing some really, really beautiful precision here. So these salad days, imagine when these become daily candles and you're starting to nail these and you're saying, if it comes down into here, I am going to look for along there. I'm going to get down to a 15-minute chart or a 5-minute chart, and I'm going to look for my first reversal down here. As soon as it tags that on a daily chart, you catch that, and you've been riding this up for the last 1, 2, 3, 4 days, and you're targeting this zone right here, and you ran all the way up and that. You go, oh, sweet. I'm as soon as that 1 hour chart shows me a reversal up here, I'm closing off my short or my long, and I'm gonna bail out of that, and I'm gonna wait and see what happens here on the daily or a 4 hour or whatever. So you can see where you can get your bias depending on whether you're a sniper trader and you want to get your hourly bias, or whether you're a long-term trader, you're using your daily or weekly charts, or you're a mega trader, you use your monthly charts and you let it sit all year. targeting that premium array on the monthly chart, and you're letting all this stuff bounce around. You don't care. You just go on vacation. You come back a few months later and see where you're sitting. As soon as you stop, imagine moving your stop loss on a monthly candle into profit. Go away on vacation. So you say, I've got a zero stress trade. I don't care what happens on my trip, because if it comes back, my stop loss will protect it. I'm already in profit. The trade's already paid for itself, and I'll let it go. I'll go away for a couple of months, and I'll come back, and I'll wait for the next seasonal tendency for me to look for my next setup. And I just do 3 trades, 2 or 3 trades a year. Those are your mega trades. All based on the same principles that I'm teaching you here. Nothing different. All right, well, that's it for me. We're getting into lunch hour now. So this is the compression stuff we're talking about. It's compressing into lunch hour. So we could be bashing around back and forth in here. So I've got nothing in here right now. You've got deep run here, a deep run higher, and you're stuck in the middle of the hourly wicks. So I'm not interested in playing in that. So that'll be it for me. Thanks for tuning in, you guys. I hope you got to learn something here. I hope you see some of the logic and the reason for the trades and why that beautiful little 2-minute candle was an awesome place to catch a short. And you watch it there. You watch it live. They're very key points, very interesting data points. Go through my time in a bottle chart or a video, and you'll see the logic behind my time in a bottle. And it's, again, it's not just my time in a bottle for a 1-minute chart. It works from 1 minute to a monthly chart. It's a fractal. It's a fractal game. So thanks for coming out. I appreciate it. And I'll see you guys tomorrow. Hopefully I'll be up early. I have to be up early because my wife's coming in. I have to get back to my regular behavioral self now. The rebel is over. Tomorrow I'm back. So today I'm doing some house cleaning, getting the house ready. Okay. Love you guys. Thanks for tuning in, and hope you got something out of this morning. If you did, hit a thumbs up, a like. I appreciate that. And subscribe. We're here every day for you, albeit late sometimes. I'm still here every day, reading price action with you, and hopefully you can get some logic out of this. If you're feeling kind of frustrated, kind of relax. You'll get it. Go back to ICT stuff. Get your foundational understanding of what it is we're talking about, because none of this stuff would be possible without ICT's teachings for sure. I've just obviously got my own thing I've adapted from it, and I'm looking at very, very precise data points that give us entries. I've got probably a dozen different types of trade setups. I have internal range liquidity hunts, short range, long range, extensions. I have all that stuff, and I share it with you every day. It's for free. I just want you all to get better, because if it helps me, why shouldn't it help you? We get into a world out there we need to share. We need to take care of each other out there. Everyone's not into this big cash grab. Everybody's out trying to take a buck off of everybody else. I'm here to help you guys get to where you need to go. So tune in, thumbs up, like, and subscribe, and I'll see you guys tomorrow. Oh, is there anything you want me to look at quick before I leave? I've got a couple more minutes. Let's quickly have a look at some of these here before I go. Nice little reverse here. Right on a 45 candle too. Jesus. And it's a 5-minute. Look at this. And if you typically take the close and the open instead of the wicks, I rarely go to wicks, but if you're using Michael's principle, and you have to understand this is kind of like the last little nugget I'm giving. There's only 10 of you in here, but this last little nugget I'm going to give you guys this morning. When we look at a volume imbalance, what are we looking for when we're looking for a volume imbalance? Does anybody know? Before I give you the answer, what are we looking for on a volume imbalance? How do we define a volume imbalance? Anyone? How do you define a volume imbalance? And I'll give you a volume imbalance here so you can see it, so then you can define it if you haven't already done so. These ones unfortunately are very small. There's one right here, and there's one right here. I want to find a bigger one so you guys can. There's one right here. It's that little ones that we were talking about this morning over in here. These are volume imbalance. Oh, that's not. That's not a volume imbalance. This one is. This one is. Those are volume imbalances. Okay? Anyone? Nobody's going to participate, hey? You're just going to wait for me to give you the answer. Okay. So when you're looking at volume imbalances, we're looking at a volume imbalance is defined by the open of one candle and the close of the previous candle not overlapping. So if that one there closes higher than the open of this one, there's a small gap there. It comes back, it fills it as a wick on both sides of it. That's a volume imbalance. With delivery, albeit thin delivery, it's a small little volume imbalance. So we define it by the candle's close of this candle and the open of the next candle. When the bodies don't reach each other, only the wicks. Yes, exactly, Hans. Thank you. Thank you for participating, Hans. So that's a volume imbalance, right? So when we're defining, if we're using the open and close, and we need to define these levels cleanly, if I take the high and the low of the candle, that is not the same thing as defining the high and the low of a volume imbalance, right? So you can't have two separate rules for defining distinctive areas. So if you use the high and the low, even with the fair value gap, here's something for you to kind of try out. See how that high here and the close here, so your close and your close, like a volume imbalance. If we just use, because if that was there, if this wick came all the way down to here and that wick came all the way up to there, we would call that a volume imbalance, right? And it would still be a sensitive area. But because there's a gap there, we only use this and this, right? And then you see these moments where they wick through, or the bodies get through here like this and come back lower. If you play it safe, your padding will be like this. When you define your Sibi and Bissies now, you can say my safety level is the close to close, like it would be if it was a volume imbalance. Close to close, volume imbalance. And the same thing for your Bissy or your Sibi. If you want to play extra safe, put it from here to here, and that should incorporate your turns. Because if you just use my rule of, if I define that exact level, and my rule is, if I break above this on a close, I'm on the wrong side of it. See how it breaks above it right here? And then all of a sudden it rips back against me, and I go, ugh, frustrating. Here's what I discovered. If I give myself a little more leniency, you get in the precision that you're looking for. Because you define it the same way you would define a volume imbalance, a price imbalance, because a price imbalance would be this sort of thing. You would, let's say you have a gap here. So you have a wick down and a little open area sitting right here. So you have a price delivered on one side, but nothing on the other side. So you have a price imbalance versus a volume imbalance. And it's defined by the same thing. It's the close and the close of the previous candle. So that's the rule. That's going to be the new kind of ease it up a little bit more. Instead of being super precise, you can draw from close to close. I'll still be pulling mine right from here to here because I want to demand some serious precision. But if you see these kind of moments like this and you stick to that rule, or at least give yourself, you say, you know what, if I'm still using this, I got to keep in mind the rule of I've got to be just above, I've got to give that wiggle room, right? And the wiggle room could be right to the close of that candle. Because if this was a, think about this, if this was a, Michael defines a suspension block, right? A suspension block would be volume imbalance on both sides of a SIBI, or a BISI, I should say. So you would have like this and another one sitting here. That would be a suspension block, right? This one right here would be a suspension block from here to here. Let's say that one came down, tagged it. That would be a suspension. So you would include the volume imbalance, and the BISI in that. And what are we including then? We're including the close of one and the close of the other. Sorry, the close of the other. Or the open of the other one. In this case, you'd be using that and that because that includes his suspension block. So he goes from the opens to the closes. In this case, if that was a down close candle, it would be a close to close. But it's an up, so you have to use that distinctive open. Does that make sense? Do you understand the logic of that? So when you see these kind of turns and it just clears it out like that, you got to give it that little bit more, if you want to give it some more breathing room for the family. That's it. That's where you say, now I don't want to see a body break above that candle's close. That's just giving you a little bit more breathing room to allow for that rule I give you on the close above the BISI. If I see that, that's my reason to go higher. That's how you should extend it. See the difference? Now if I go like, watch this level right here. Here's the difference between mine. Almost get it. You're fractionally away from it. Look at that. Zoom right in. You'll see it. You don't quite get it, right? You're like, oh, if I just tag that, I could catch that short. If I do the open or the close here to the close, now look. Now you've got your short. You see the logic there? It's just a small little fractional thing, but it's a nugget of information that I just shared with you guys because I think I looked at this the other day. I was like, yeah, it makes more sense. It makes more sense. So anyway, I hope you appreciate that. I hope you see that and you understand the logic of that versus the precision I demand. All right? Look at that. Right on there now. Holds it. No body goes above it. And it says, all right. That one actually closes below it. Opens right on it. And sends it lower. Delish. So now you get to see the pros and cons of it. So, do you treat gaps that has 3 consecutive bullish or bearish candles? Oh, okay. So In other words, if I see, are you saying, do I treat this like a gap? If I see bullish, 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 do I treat this all as a giant gap? No. No, I do not. I only look for where wicks and bodies overlap, whether there's a space there or not. I don't look at that as a gap. Though I would look at that as a gap on a higher time frame. Like if I was looking at that as a 5-minute candle, look at that on a 5-minute candle. That becomes a very important level right there. Right? We trade through it. We come back inside it right here. Let me show you this just to answer your question here. So that level we were just looking at, I think this was the one here, was it not? This was this. Yeah, it's that candle right there. Okay. It's that last big bullish one here, right here. See those, all those 1-minute ones were right here. They're a cluster in here. So you look at this and you go, where do they overlap? Where's there a little space in there? Ah, there's a space right there, and right there. And I go, ooh, that's a nifty little bissy. After taking a high, that becomes an area of interest for me. Look at that. Trade through it. Look at the bodies. You get a bit of wick action. Look at that. Boom. Down you go. Right? So that's what I look for. I just look for the first time we get a high taken, I look for a track back and I look for a bissy. Do I find a bissy there? That's my, if we start to run through on a 5-minute chart, I go, I got to wait another 5 minutes or 10 minutes now. I've got this turn going on here and it's the bottom of the hour. Look down here, 8:30, bottom of the hour. I see a run. If I say, all right, if I get a breakthrough here, I'm going to target this next low, or at least 50% of the wick or rejection block, whatever way you want to trade that. If you want to trade the rejection block, you say, as soon as it hits that rejection block, I don't want to see the rejection block get hit first. I want to see it come back in, tag my level here, and then I want to target that down there. Because there's no bissy above me, I don't want to see it close above that. If it closes above that, I'm on the wrong side of it. I'll wait. Right? So it comes back up, gives you a little bit of a scare here, squeezes you for a couple of minutes, then came back, stopped, and you went, okay, I like that. Opened, you guys started squeezing you again, started making you doubt yourself, and then it went lower. And then finally hit the rejection block. You paid yourself, or you paid a portion off there, moved your stop loss to break even now. Zero stress trade. You've paid yourself. And now it comes back up. This is keying off of a level you want to see. It's wick, the body, and the mean threshold is your line in the sand. It doesn't hit the mean threshold. It just keeps coming and then finally breaks the low. Pay yourself at the low and you say, now I want to see that low broken. It is right there. Look at the low on that candle. Look, when I look at it right here. Where's my little dot? My demonstration dot. Look at this level right here. Okay. The low on this candle is 86.40. Look at the close on this candle. 86.41. One tick below that low. That qualifies this as a break or a close below the low. Even if it's one tick. You come back up. Look at the high on this candle. The high is 48. Low on that candle is 40. We close at 41 and we high on 48. So you pop in there, nice clean, you enter. Now you, because you've already got your trade, most of your trade off, you go a piece off here, a piece off here, and you leave the rest to run now. Target the next one, the next one, the next one. Or wait for a 5-minute reversal. This is a 15-minute chart, by the way. A 15-minute reversal. So you'd have to wait for this to close back up through here. That's too much of a loss for me. So I would pay on the way down. And that now becomes your new reversal. If we close above this and come back and retest it, now we're looking for a run back into that range. And that's my bull trap. Does that make sense, Pablo? Do you understand the logic of that? So I don't look at that as it's a 1 minute chart. All those little 1 minute candles are my, like I've got to be careful of those because they're all 1 minute. I just look for these blocks in there. Once we see like this right here, oil, this is a beautiful little oil trade right here. See how we've got this low taken? Then you see this and you go, ooh, if we could just see that. And you got to keep in mind, we're inside this range. You're already over the 50%. You've already hit the premium. The fruit's been picked inside this range here, right? So you go, I don't want to see if it's been picked before I can get in on it. And right there is a beautiful entry, by the way, to hunt for 50, 62%. Pick some fruit. And if it starts to reverse on you, you go, wait, it sweeps this low. And I go, I am targeting right here for an entry, right? So I'm looking for that. And this is what I've taught you in the past. If you get one candle that rips all the way through this, where's my next candle? It's this bull trap here. If the bull trap gets closed above, then I'm targeting the bull trap. If not, I'm targeting this here. So I wait. The next one just like rips away from it. You go, ooh. Now if I could get a nice little retest of this candle here, this bull trap, before breaking any new highs, then that's my target. It doesn't come back to it. This one closes above this candle, not this one. It continues to rip higher through this one, and go, now this one becomes the important one. If I can get its mean threshold from here to here, if I can get a retest of that, I'm looking for higher prices. I'm targeting here, 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 and here. Look at that. Comes back inside it. We broke above it. You come back inside it. You catch it long. Pay, pay, pay. Then you see this right here. You see a reversal and you go, if we close below that, I'm on the wrong side of it. Closes below it. Now, if you use my rule, the other rule, which I just finished giving you, and I wait for the open to open to close, I should say. Oops. See right there, we did not close below it, but in here you did. If you use my precise rule, then we close below it. You say, now I'm expecting this to go lower. Then it closed above it. And I go, now I'm out because it's the mean threshold's my line in the sand. It's traded above me, right? So I'm out. I wait for a market structure shift now. If you wait and it finally closes below it here and you go, comes back, tags it, and goes, you're expecting it to come lower, but it's already hit the level where you want to see price hold at to go higher. So now that you got the conflicting, it's going lower, it's going lower. Now it breaks through here one more time, comes back into it one more time, drops below it, hits this level one more time, change in direction, rip through it. Body does not close above this high. It does right here. Look for the mean threshold of that candle. No bodies break it, and we still go higher. You see how the wicks can do a lot of damage. If the when this candle's forming, it's a psych candle. It will psych you out. You make the decision at the end or the close of the candle, not while the wick is forming. Not while it's forming. Wait for the candle to close. It'd be no different than if you practice like this on the weekends. That candle closes and you go, now I make a decision. It's going to go higher or lower. It's going to go higher. I'm looking for a specific target. You draw this out, you hold it all there, and you say, where's my next candle? I make a decision. Takes off of here, keeps going higher. I want to see it break that high. If it doesn't, I'm going to wait for it to get back here. So then you wait 5 more minutes. Breaks the high, but it doesn't close above the high. And you wait for your next decision. And you just keep practicing. That's how I practice on the weekends. I used to do this for hours and hours and hours. I didn't have this replay button here because I used to use Meta 5. So we didn't have replay buttons. Now you can just close your eyes, block out a whole ton of trades, and then just click through 1 minute at a time. Make your decision, map out your charts, and practice on the weekends. Right? You literally practice what we're talking about every day. You practice that on weekends. So anyway, there's your retest. Send it higher. Looking for bull trap. These guys are the ones that you're worried about them clearing out, because now you got to change in direction. Now you've taken out a high. Got to change in direction right here. We haven't retested it yet, and we're back inside this range here. You've already picked the fruit, internal range liquidity. So now you have to say, I have to wait for it to break that high, find some support, and continue pushing higher into the next bull trap, which is my target up here at 85.94. I hope that helps. Anyway, let me have a look at a couple of other things here, and then we'll leave you guys to get on with your day. Look, it's a lion. It's a lion. You know that African thing they do at the beginning of the Lion King? You know what they're actually saying? Look, it's a lion. It's a lion. That's it. Look, it's a lion. A lion. Get that, eh? Coin, the Bitcoin. How many times have you seen me talk about that today? Look at that. Right back up. Give those highs a tag. Send it up. Watch that level. Get on top of it. Send Bitcoin for here. 71,000. And change. Low, high. High broken. You want to see high broken and this high broken. Body closes above it. Right here. Retests it. Go higher. Wait for a reversal. Get out of your trade. So all you're using is model 3, take profit model 3 as your exit. And it is also entry model 1 to go short. So entry model 1 and take profit model 3 dovetail one another. They get you out of a long and into a short. I've created them to the point where they can overlap one another. So they kind of dovetail as one is going up. One is the exit as the other one is showing you the reversal. Are you getting that? The last 7 of you that are in here just got another little nugget of information. I'm doing like Michael does now, give you little nuggets at the last few minutes that I'm in here. So entry model 1 is also take profit model 3 on a conclusion. So we enter long here off of this candle, enter long. We wait for the first BISI to form above that gets broken right there. That is now our close of our long, and we wait for model 1 now, because this is showing you model 1 has just been activated. The entry for model 1 is right there. Precision. So model 1, you've now got profit on the way up, model 1 on the way down. And where am I targeting? Mean threshold. Or 50%, 62%, internal range liquidity, low hanging fruit inside here. Model 1 is targeting low hanging fruit. So you're right here, 50%, pay yourself, pay yourself, pay yourself, all the way down to 70% optimum trade entry reversal. Look at that. Let me stretch it out a bit so you can see it. Look at that, 70%, bing, and it finally comes back and takes you out. You're done. internal range liquidity, and then you just wait for the next model 1, which is right here. Low taken, model 1 entry activated. Activated on one candle, you go, I want to see it come back and tag this. If it doesn't, if that candle closes above this candle, then this becomes my entry point, because now model 1 has been dumped for model 2 for the next internal range liquidity. So there's the mean threshold right there. It holds it, sends it up for the next premium box, where model 3 continues. You don't get a model 3 here, so you wait until model 3 either gets hit or model 4, which is model 4, which is also model 4 is your entry. Model 3 take profit, or take profit model 3 is your exit, and take profit or entry model 1 is your entry. Same thing, rinse and repeat. Model 1 entry, model 2 extension to premium, model 3 looking for range extension, model 4 support, go higher, takes out that high right there, pay yourself, move to break even, comes back, takes you out. You wait. See this small little busy forming right here? Wait to see if it holds right here, trade below that level, and then start targeting back down into this consolidation, mean threshold, and then this guy down here. We close above there, watch for a retest on this, which it just did. Look for a retest and then send it higher. It's the same thing over and over in gold. Anyway, it's a nugget, another nugget of information for you guys. How far is this behind? There we go. I think that's about enough goodies for you guys for today. Look, it's a lion. It's a lion. Look at the lion. It's a lion. Citigroup, look at that, hey? The bounce off the breaker. Well, this is not looking good for you guys. Looks like you're ready for another dive down. We're getting near March now. We're getting into March. Last couple, and then I'm done. I'm out of here. It's 10:30 already. Roku. Look at that. Look at that. T1 Energy. See, we got this little premium box here, right through to the discount box. We traded through it. We came back to it and then went right through the go, no go zone. Then we came back to the no go zone and then we went higher. Took out the high, right back up in the premium box. And you want to see this close above here. Use this as support. There's your entry for a long in T1 Energy. Same thing here. This is looking good. We're getting into March deals, March Madness deals now. Anyway. That's it for me. When bodies don't reach each other, yeah. Do you treat the gaps? Very nice, Darren. Thanks. You're welcome. Thank you. But what if the three candles that forms a gap are either all bullish, bearish, or some of these three are bearish, bullish? Do you treat those gaps differently? Yes. These nuggets taste good. Chicken nuggets, man. Chicken nuggets. All right. That's it for me, you guys. Enjoy. Watch the video again. You'll see the logic there. And see you tomorrow. As usual, sending the love. Be kind to each other. Take care of each other out there. See a stranger. Treat them well. Treat them with respect. You don't know what the kind of model of the world they're living in. So treat people with kindness, man. That's all you can do. Because one day you'll need it from somebody else. So be kind. See you guys tomorrow. Take care.